Good morning out there, folks. This is Darius Dale here to present our macro minute for Tuesday, January 4th, 2022. Starting with markets, we have stocks up, commodities mixed, crypto up, dollar up, global bond yields mixed this morning. Big movers, you have Bitcoin up 1.5%, Nikkei 225, Japan's benchmark equity index up nearly 2%, Ethereum up nearly 3%. On the economic front, the second batch of December manufacturing PMI data was just as revealing as the first with respect to the post Delta bounce in global growth petering out in November. So, on the accelerating front, you had one economy that was China's Caixin index ticked up to 50.9. That's the highest print we've seen since June. Unchanged was Brazil and Mexico. Brazil's 49.8 was tied for the lowest print we've seen since May of 2020. And then decelerating, you had the U.S. market index ticked down to 57.7. That's the lowest print we've seen since December of 2020. Japan also slowed. UK also slowed. Australia and Indonesia also slowed. So global manufacturing PMIs are now broadly trending lower, taking it here to the chart, particularly in the large economies that export the most goods. If you think about, kind of the Germanys, the Chinas, the Brazils, the Russias, Koreas, and Taiwans of the world. Obviously, got the ISM headline, the world global PMI there as well. And what this chart obviously is showing here on the y-axis is the 6-month moving average minus the 12-month moving average to calculate the impulse of the manufacturing PMI. Clearly on the x-axis just shows the level. So the level for a lot of these indices is now starting to get pretty close to contraction. Not, I don't expect it to go into contraction. We're not going to have a manufacturing recession anytime soon. But the reality is, there's a consensus view out there that slowing industrial output globally will continue to fuel inflationary pressures. But I think that take misses some of the nuance of a past peak U.S. goods consumption cycle. For example, real goods PCE in the November report that came out while everybody was celebrating the holiday, it actually slowed to down 9% year over year on a seasonally adjusted annualized basis in November. That's the sharpest contraction we've seen since July. So be aware of all these dynamics. With respect to today's probable range setups, you got overbought signal still in the WTI, dollar versus Japanese yen, 10-year boom yield, 10-year JGB yield, 10-year gilt yield, 10-year Swiss yield, the 30-year treasury yield, and the 10-year tips break even. So a lot of what we're seeing in terms of the backup in global rates, kind of getting close to burning itself out here. We think, at least from a very near term perspective. Oversold signal, currency volatility. S&P 500 is still bullish, VAMs minus 3% of downside versus 1.8% of upside. WTI is still bearish, VAMs minus 13% of downside. It's at the upper boundary of its probable range. Bloomberg Dollar Index minus 0.5% of downside versus 1.3% of upside. That's still bullish, VAMs. 10-year Treasury yield still bullish, VAMs minus 19 basis points of downside versus 3 basis points of upside. Bitcoin still bearish, VAMs minus 8% of downside versus 8% of upside. Ethereum bearish, VAMs minus 10% of downside versus 6% of upside. And then gold still bullish, VAMs minus 1% of downside versus 3% of upside. And BAMs, again, is our volatility adjusted momentum signal. Check out our website for information on how we calculate that. With that, Darius Dale presenting our macro minute for Tuesday, January 4th, 2022. And for all you 42 macro subscribers out there, we'll have our January macro scouting report in your inboxes, about 125 pages of data and rigorous analysis in your inboxes this afternoon. So thanks. Looking forward to unpacking that with you guys over the next few weeks. Cheers.